He's the president of finance at NYU's Stern School of Business. Welcome back. It's nice to see you.
Thank you for having me.
I feel like, it's becoming a bit of a broken record. I mean, we have you on. Tech stocks go up. NASDAQ extends its record high. And I ask you the same questions because they're the only questions that really seem to matter right now. But your answers might have changed because the stocks continue to go up and the valuations theoretically are getting more extended. How do you answer it now?
It's a bit like Groundhog Day. You're absolutely right. We talk about the same issues over and over. But collectively, these 7 stocks have had, it's not just the last 6 months. If you look at the last year and a half, they've added $8.8 trillion in market cap, just these 7 companies. Just to give you perspective, the second largest market in the world, China, is a market cap of $12.1 trillion. These 7 stocks alone have added more in market cap than the entire German market, the French market, the Swiss market. It's been an astonishing run. But I would also argue that before we dismiss these as risky tech companies, these are the money machines in this market. So when Jeremy Siegel talked about value stocks, I think in many ways, these have become the value stocks for investors who care about earnings and cash flows, because these are the companies that are delivering those earnings and cash flows.
If you ask Nvidia stock investors about the biggest risks to the company, many started talking about the U.S. China trade war and how it forbids Nvidia from selling its chips to companies operating in China. This is extremely important for Nvidia, as the Chinese market used to account for as much as a quarter of Nvidia's total data center revenue, and the company made $10 billion from China in the last fiscal year. So, it's no surprise that Nvidia doesn't want to lose the Chinese market and has tried to come up with less powerful chips that would get around the trade restrictions. And according to a new report, Nvidia is set to make a whopping $12 billion from China this year, despite the sanctions. And this is what we're going to talk about in today's video, as well as how this might affect Nvidia stock. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Wow, so you don't necessarily think that we're in any kind of danger zone in terms of valuation here?
Now, if we're in the danger zone, it's not just the 7 stocks that are in the danger zone of tech stocks, it's a market overall. I compute a monthly market equity risk premium. It's my personal indicator of how hot or cold the market is. Start of July, that equity risk premium, the implied equity risk premium for the market is 4.11%. That's the lowest number it's been since September of 2008. In other words, it's almost as if the market has raised the last 15 years, and we're looking at numbers very much like what they used to be before the big crisis, the 2008 crisis. Now, the question we can ask is the market overreaching on that assumption? But a 4% T-bond rate and a 4.11% equity risk premium is 2005, 2006 numbers, not 2018 or 2019 numbers.
Does that tell you that we might be heading into a certain place we need to be aware of?
Yeah, I think we need to be careful. I think 4% to me is a red flag, at least from the numbers I've looked at historically. Once equity risk premiums drop below 4%, it's almost like a magnet pulling them back towards a 4%. So I'm going to track that number, and I track it at the start of every month. And at the moment, I think we're getting to a point where even pre-2008 status, you'd say this market is reaching, a zone where you might need a correction to clean it up again.
According to a new report by Financial Times, Nvidia is set to deliver more than 1 million of its new H20 chips over the coming months to China. And these chips are designed to fall outside of U.S. restrictions on selling AI processors to Chinese companies. Analysts from research firm Analysts noted that this figure is almost twice as many as Huawei is expected to sell of its China-made rival product, Ascend 910B. As you might already know, the U.S. is forbidding American chip makers from selling their most powerful chips to China, fearing that Beijing may use them to create more powerful AI systems with military applications. This affected Nvidia's sales in the country greatly. In fact, in the company's last earnings call, CEO Colette Kress revealed that Nvidia's China sales are down to a mid-single-digit percentage, which is an extremely significant drop, considering the fact that China once accounted for 25% of Nvidia's data center sales. So, the fact that Nvidia is still set to earn a lot of money from the country is very bullish for the company, and we're going to get right into what this means for Nvidia stock, so don't miss out. Hello everyone, and welcome back to Investocracy.
Nvidia did get hit with a downgrade this morning from New Street Research. Analysts at the firm saying they see limited further upside and are downgrading the stock from buy to neutral. Well, Brett, everybody's trying to be a hero on Nvidia. All I know is I go back to a recent JP Morgan story, and it is very simple. Demand continues to outstrip supply for Nvidia chips, and as long as that continues to happen, there might be some volatility in the name. How do you dump this stock? I mean, they're a beast. They're on a path to potentially $10 trillion market cap.
You know, it's not a stock particularly that's just one that you talk about where it's just, okay, yeah, just trade this name. No, it is an investment decision that has now been regarded as such for a long-term kind of hold type of mindset. It's not something that you're trying to day trade at this juncture, even though it got a little bit more affordable after the stock split that took place in a couple weeks back.
Last thing you want to hear. So you call up your money manager and they tell you, hey, I hope you had a great July 4th. Yeah, I'm going to be lightening the load on Nvidia. Who the hell wants to hear that? I mean, that is the great way to lose your job and lose client money. I mean, it's tough to sell a stock that everybody is rightfully very bearish on for strong fundamental reasons. Yeah. I mean, the AI chip rollout, this is not late 90s .com stuff with companies not making any money. This is real stuff, real technology, and this company continues to be the leader by years. I mean, by years, they're leading other companies.
According to the semi-analysis analysts, each H20 chip costs between $12,000 and $13,000, suggesting that Nvidia is likely to generate upwards of $12 billion in sales. This would be more than the $10 billion the company made from its entire China business in the last fiscal year, which includes selling graphics chips to PC gamers and other products. It's important to note that analysts at both Morgan Stanley and Semi-Analysis say that the H20 chip is now being shipped in volume and is proving popular with Chinese customers, despite its downgraded performance compared with the chips Nvidia can sell in the U.S. Additionally, Semi-Analysis Dylan Patel said that while, on paper, the H20's capabilities are below that of Huawei's 910B, in practice, Nvidia's chip is actually better, thanks to superior memory performance. He also estimated that Huawei would sell about 550,000 chips over the same period, as the company and its manufacturing partners are still struggling to produce the complex chips in high enough volumes to meet demand. Keep in mind that most Chinese AI companies have built their AI models on top of Nvidia's ecosystem and software, meaning that switching to Huawei's infrastructure would be time-consuming and costly. So, we can say that Nvidia is set to make a massive recovery in the Chinese market, which would definitely reflect positively on Nvidia stock. Combined with the upcoming release of its most powerful platform ever, Blackwell, Nvidia is set to dominate the second half of 2024, even if the company's stock is currently struggling. With this in mind, is now the time to go all in on Nvidia stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
The interesting kind of annexation, or at least dot-com bubble analogy that Nvidia has been drawn to time and time again now is actually Cisco. And if you go back and take a look at their stock chart, one of the things that you'll see that is quite similar here is this hockey stick type run up during the dot-com era, and then it had to grow into its valuation. Now, of course, it declined precipitously in the aftermath of that bubble bursting, but then eventually, over years, was able to grow into that valuation because people could see the applications and the use cases for the technology that that they were bringing to the market. It's the same thing with NVIDIA here. We just don't have a million chip data center right now because it's not built up yet. And so that's perhaps the next part of this generative AI trade. When we talk about picks and shovels, it might literally be picks and shovels building up some of these data centers, picks and shovels putting some of the electricity in the ground or overhead or however you're building that grid out in order to make sure those data centers have the necessary utility and power that they need.
No, right on, Brad. And I think you have to be thinking about, it's not just the NVIDIA trade, it's the whole ecosystem. You had a great conversation on my podcast, Opening Bid, cheap plug for myself there, with Brooke Dane, portfolio manager at Goldman Sachs Asset Management. His, I think, view was, sure, you can continue to own NVIDIA, but think about some of the companies that are trying to compete with the likes of NVIDIA over the next 5 to 10 years. It's a Marvell, it's a KLA, it's a Micron. None of these companies are really going to take material market share from NVIDIA today, but as long as they could sell that sizzle to investors, those stocks might rise along with NVIDIA.
A while ago, many investors would have said that Nvidia stock is a stock to buy and hold forever, and some even recommended buying it for retirement portfolios. But now, the stock is pulling back, leaving many to wonder if the company was in a bubble, and now it's bursting. But there's more than one reason why Nvidia stock still has more room to run. According to some estimates, the global data center market could reach $418 billion by 2030, growing at a compound annual growth rate of 9.6% from 2023 to 2030. This is NVIDIA's main segment, in which it reports the sales of its flagship AI GPUs. And since NVIDIA owns 80% of the AI GPU market, it's in a very good position to capitalize on this growth. Moreover, demand for generative AI continues to increase, and many analysts think that this will be a $1 trillion industry by 2030. And NVIDIA has already benefited from this and will likely continue to do so. In fact, the company saw its data center revenue soaring by 427% year over year to $22.6 billion in the most recent quarter. Investors should also keep in mind that tech companies are buying as many GPUs as they can get their hands on because they want to train their AI models. For instance, Facebook parent Meta plans to have 350,000 of NVIDIA's H100 chips in its computer infrastructure by the end of the year. Additionally, NVIDIA has a long history of delivering above-average growth and returns to shareholders, but its current growth is off the charts, with revenue jumping 262% year over year in the most recent quarter. We can't say for sure that the company will continue to see its revenue triple every year, but what's for certain is that if investors patiently hold the stock over the next several years, they might see satisfactory returns. This is because NVIDIA will continue to innovate with new products and AI solutions to drive long-term growth, and this is shown with its new Blackwell platform. In fact, the company expects demand for Blackwell and the new H200 data center GPU to outstrip supply in the near term. Not only that, but the company expects its fiscal second quarter revenue to be approximately $28 billion, representing a 107% increase year over year. So, in my opinion, this level of demand makes the stock a no-brainer investment. But, what do you think about NVIDIA stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for NVIDIA is. If you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.